Welcome back to Primary Source China Investment. This week, we're on show K3. And Peng Guo and I wanted to talk a little bit this week about the market, the equity market in particular, because it seems like we've gone from China's uninvestable 2 weeks ago into this week now. China seems to present some opportunities for investment. So we'll try to figure out why that is and then where we're going. So first up, there's some policy issues that have come into place and caused a big piece of this sell-off back in February. And but before we get into that, I want Peng Guo and I to take a little bit of a victory lap here. On January 30th, we talked about continued risk in the equity market, and the CSI 300 continued to slide another 20%. Then on May 22nd, we said it might be A-shares time, and the market has bounced about 10%. We came to these conclusions largely by following policy, but also watching what investors are doing on the ground. So the question is, what now? Where are we going from now? So Peng Guo, I'll send it to you to start off this week.
Yeah, I think a couple of weeks ago, we kept saying like the China related, no matter in Asia or overseas, KWEB, this is just keep close eyes on the bottom area and think about the opportunity. Because China equity market always gives you a surprise.
Yeah, so, you know what's interesting? You mentioned KWEB at the start. A lot of those stocks have now rotated back to Hong Kong listings.
That's right. That's another huge opportunity, at least for Hong Kong. I think right now is that still China and the United States, they negotiate the terms, how to figure out the audit related stuff. But definitely Hong Kong is the big winner. And also last Friday, after market closed, the big news released Hong Kong and the China ETF market get connected. So they can purchase the ETF directly from the each market for the both side investors. That's absolutely great news for the ETF business as well for the index related business. So I think that's before that, China market is already reached the bottom. So remember a few weeks ago, we talked about the technical bottom, policy bottom, that's all get to show up. So that's China Asia market will continue get up for 7 weeks. That is it's an unusual situation. So most of the time, China Asia market is quite bumpy, but at this time it's just a one way go up. You never get it. If you don't buy it, tomorrow it will be more expensive. That's it. So that's a very unusual situation. On the other side, also reflect multiple bigger policy issue, COVID related issue, and they get a they're already priced in the market, and right now the risk will get released and market bounce back very quickly.
Yeah, there's a number of things that you mentioned in there that we've actually talked about, and those of you following along know that we said the news cycle is probably a lagging indicator because bad news continues to come out. I mean,
exactly
the macro environment in China is not great, but what happens is when the market catches a bid, more and more people feel like they're going to miss out. So you're in this mode right now where buyers beget more buyers, and you're seeing that in the major market index and a number of the underlying indexes as well.
That's true. And also it's still the same situation like we discussed before. You have to choose the right sector because each sector, the performance is a huge difference. Like the bank obviously is like the losing, and the energy sectors that get retrieved. And also, I think at this time, bounce back is really represent like the future, or at least a near future, is with the solar and the new energy car. So those are the two big areas. The market is pretty smart and accurate. It always captures the right companies. So just follow the market, follow the trend.
Yeah, that's a good point. We talk about KWEB here a lot. And KWEB is actually probably not the best proxy right now for those kind of companies. Like CATL is a great example. They just did a Shenzhen offering. We've talked about CATL in the past, but in Hong Kong, there's actually a number of ETFs that U.S. investors can purchase. Just set up an account with Fidelity or interactive brokers. And some of those include like China Cloud, robotics, EVs and batteries, those kind of names, even the Star 50, actually Star 50 trades in the US as well. So those are the kind of sectors or micro sectors within tech that might be interesting. I'm not a big proponent of that kind of investing. You know me, I'm a broad-based guy. I'm more of an allocation guy, but there are ETFs, and with Stock Connect allowing ETFs, there's going to be more and more availability of A-share specific ETFs available for investors.
And that's right. And China, they maybe next time we can talk about which sectors China get advantage, and which sectors they have a huge gap. The problem when they should buy it. Right now, as long as they know they should buy it, the market already get up.
Right. That's the other thing. There's an information gap between what's happening on the ground and by the time it gets to New York or London or some other place. And that gap should have been closing a long time ago. I mean, you and I have been talking a lot about this rotation away from U.S. listed Chinese stocks, and forget about the regulatory environment. These companies are taking it upon themselves to have dual listing now in Hong Kong. So that's the path. We've been talking about it a long time. It's really happening now, and you're seeing that with these U.S. ETFs. They're now buying the Hong Kong version of the stock instead of the U.S. version of the stock.
That's right. Maybe triggered definitely a lot of new opportunities, and maybe good for the brokerage firm and the related sector.
Yeah,
so
we
should buy the China-related brokerage firm.
It's the upside of decoupling,
That's right.
Yeah, there's always an upside to that. So, again, I just want to leave with the final caveat. There's a lot of sectors, and most investors are not going to be able to sit and pick and choose which sector. And we talked about the tech sector today, and the micro exposure you can go grab. But generally speaking, for allocators, and I think most of our audience is just allocators, buy a broad-based U.S. listed ETF of A shares, which again, I keep going back to ASHR. Probably augment that with a little bit of fixed income as well.
Sounds good. Yeah.
All right, and we're going to leave it there this week. Thanks for tuning in. We'll be back next week. Stay cool.
Thank you.